Then we'll start the class today. I think last class we have discussed about risk management section. So far we have completed the incorporations and then licensing of finance institutions and shareholders. And in the last three classes we have discussed about the risk management. I like to reiterate that the risk management will be an important topic for an exam point of view. Okay. Then today we are going to start with the new section called compliance function of the banks and finance institution. This is also the exam point of view. It's an important topic because most of the times, not always, most of the times you can have a exam or in the past paper. There are questions on related to the compliance function for 20 marks. So in exam point of view, it is important. So if you are thorough with the compliance function, then you can earn at least 20 marks from in the exam. So having that introduction, I like to move into the compliance function. Before going to that, if you have any questions on the last class about the risk management or anything, or you wanted to clarify anything, I'm giving a few minutes to you all to ask the questions or anything. If you have any questions, first of all, I like to attend that. Then we will continue the class. Okay, the compliance function. Then we have before starting the compliance functions and discuss about the related topics related to the compliance function. First, we will see about what is compliance risk, because the compliance function is mainly related to manage the compliance risk. In the last class in the risk management section, we have seen that there are several risk categories, mainly the financial risk and then non-financial risk. Under the non-financial risk, there are several categories called operational risk, IT risk, legal risk, compliance risk, reputational risk, likewise. So compliance risk is one of the main risks which these banks and finance institutions are expected to follow with this compliance risk. So to manage that compliance risk, this compliance function is formulated by the banks and finance institutions, and they are managing the compliance risk through the compliance function. So in that point of view, it is better to see what is compliance risk. The compliance risk is the exposure to legal penalties, financial punishment, and material loss an organization faces when it failed to act in accordance with the industry law, regulations, internal policies, and prescribed best practices. This is sort of definition we can see on the compliance risk. But in a simple term, if we understand about, or if you have an understanding about the concept, what is compliance risk, because in terms of banks and finance institution, there's a regulator. And generally, the Central Bank of Sri Lanka is a regulator for banks and finance companies as well as specialized leasing companies. So regulator, time to time, introduce a number of direction and guidelines. So, and on top of that, there are act as well. So legal act also there. So these finance institutions are generally expected to follow those directions as well as these laws and regulations. Even the Inland Revenue Department, which may issue several circulars or direct issues, some guidelines, and which every company, banks and finance institution has to follow. And environmental authorities, there may be issued several laws and regulations, and industry laws and labor laws. Likewise, there are several laws and regulations these banks and finance institutions are subject to these loans, these laws and regulation and industries. So in case of these legal requirement, all the banks and finance institutions need to be comply with that. If I give an example, if you all are working in the banks or finance companies, particularly bank, you all may know that the SLR, statutory liquid asset ratio, which we have discussed in the risk management section. So under the statutory liquid asset ratio, all the bank has to maintain 20% as a liquid assets against their deposit liabilities. So it is mandatory. It is imposed by the direction based on the bank, based on the powers given by the Banking Act. So it is a mandatory. So all the bank has to maintain 20% of liquid asset as a to against their deposit liabilities. So in case a particular bank failed to achieve the 20% level, then what they have to do is they have to pay some penalty to the central bank, which may create finance, which will be considered as a financial punishment. Okay, that's why it says that it's a legal penalties of financial punishment or material loss an organization faces when it failed to act in accordance with the laws and directions. Okay, that is called for compliance risk. I think you have an understanding. And failing to comply with the rules, regulation, and specification would bring costly consequences like litigation, potential damages to the business and reputation. Actually, the reputation is most important thing that may create severe damages than financial losses. For example, I think you may heard about the Financial Intelligence Unit. It is one of the part of the central bank under this KYC and AML, this anti-money laundering and terrorist financing, preventing terrorist financing act. There are some regulations the financial institution has to be followed. So if they fail to follow those requirements, they are supposed to pay. They are supposed to pay those finance. The failing finance institution need to pay some punishment or penalties to this for this FIU requirement. So in that scenario, the punishments or the penalties, financial losses may be small amount, maybe 1 million, 2 million, or, but it may create a huge reputational risk to the particular financial institution, because the time to time, I think every quarter, FAU announce that through the press releases, they will announce that okay, we have imposed the penalties to these institutions for a non-compliance of FAU requirement, financial institution requirement. So those things will create reputational risk or reputational loss also, not the risk, reputational risk. So all these risks could be considered as a compliance risk. So actually, if there is any question in the exam paper, what is compliance risk, then you can give a compliance risk definition. I gave you a definition in the tool, the slide, the particular slides about the BIS definition, the Bank for International Settlement definition, which says that compliance risk is the risk of legal or regulatory sanctions or financial loss or loss to reputation. A bank or financial institution may suffer as a result of its failure to comply with all applicable laws, regulations, codes of conduct, and standard of good practices. It may be this, so it considers, according to this definition, this compliance risk could be non-compliance of anything legal or regulatory requirement, or its best practice, industry laws, and everything will be considered as the compliance risk. So having the data about the compliance risk, now we can move to the compliance function. Before moving to that, if you will have any questions on compliance risk, then I can just answer that, or otherwise I can move to the compliance function. You will have any questions about the compliance risk? Okay, if you don't have the questions, then I just move to the compliance function. Like risk management function, in the banks and finance institution, there's a separate function called compliance function. This is also one of the second line of defense category. This will be also considered as a one of the second line of defense category. So the compliance function is an independent function that identify, assess, monitor, and advise as well as report on the banks and finance institutions compliance risk. I have already mentioned to you all that this compliance function is always looking to the focus to the focus on compliance risk. So the compliance risk as in the risk management, when we are studying about the risk management, I have said that there are 4 processes in the 4 steps in the risk management process. What are those 4 steps? In the risk management process, we have discussed about that there are 4 processes in the risk management. What are those 4 processes? Can someone, you can just unmute, I just reiterate, you can unmute the microphone or through the chat box, you can send it in the risk management. There are 4 steps in the risk management. What are those 4 steps? Come on, students. Yes, exactly. It is identifying the risk, assess the risk, control the risk, and monitor the risk. Likewise, the complaints function also have the not only the 4, here we are saying that 5 steps, 5 functions are involving in the complaints function. First one is identify the complaints risk and assess the complaints risk and monitor the compliance risk and advise the compliance risk as well as report the compliance risk. So these 5 steps will be included in a compliance function of a bank and financial institution. We will discuss this idea, what is identifying, what is assessing and monitoring all in detail manner in the next slide. So for time being, just have an idea that the compliance function is an independent function that identifying, assessing, monitoring, advise and report on the banks and finance institution compliance function. Okay. Then you may ask that we are talking about the applicable laws. Compliance risk is considering non-compliance of applicable laws and regulations and all. So what may be these laws and regulations standard? So it may be primary legislation. In case of banks, the Banking Act will be the primary legislation. In case of finance companies, Business Finance Act may be the primary legislation. And rules and standards issued by the supervisor. For example, in case of banks, Bank Supervision Department of the Central Bank of Sri Lanka, time to time issue several rules and direction standards. There are directions and guidelines issued by the supervisor. In case of finance companies, there may be several like bank, non-finance, supervision of non-finance institutions issue the several directions and guidelines to the finance companies, which will be applicable, which will be coming under the applicable laws and rules and standards. And the market conventions. So the market discipline or market some market to get together, there may be some conventions which may include it. And code of best practices promoted by industry association. So for example, if it is a finance companies, finance house or banking institutions, there may be bankers association. they may have some code of best practices promoted by industry association. So those will be applicable. And even internal code of conduct applicable to the staff members of the bank also will be considered as a applicable law. So here the message I wanted to pass that these applicable laws, rules and standards include not only outside rules and regulation, it also include internal code of conduct and applicable staff, internal code of conduct as well as rules also applicable to the staff members. So this is about the compliance function. And I have already mentioned you all that compliance function become as a part of the second line of defense. Okay. I like to recall the discussion we had in risk management section, where I have teach you all that, or we have discussed about the 3 lines of defense. The first line of defense, second line of defense, and third line of defense. Who are the first line of defense? Who are the first line of defense? Can someone answer? Who are the first line of defense? Business unit become the first line of defense. Who is the second line of defense? The risk management, centralized risk management department become the second line of defense. And internal audit will become the third line of defense. Here, of course, this compliance function also part of the second line of defense. In some banks, they may have the risk management and compliance function together as a one department. They may call as a risk and compliance department. So the particular department will look after the risk function as well as compliance function. If it is a large bank or the sort of sizable bank, then they may have a separate department, 2 separate departments for risk management as well as compliance function. So it is always better to have a, based on the industry practice, it is better to have a separate compliance function from the risk management function. So this compliance function also will be considered as a second line of defense in the financial institution. Okay. Then I have already mentioned you all that there are 5 steps in the compliance function process. What are those processes? First is identifying the risk. For example, if they are, for example, let me assume that a bank going to introduce a new product. Okay, new product to the they are planning to launch a new product to a customer. So in that case, what they have to, under the compliance risk, what they have to do is, okay, with related to this new product, okay, what are the legal requirements we have to comply? What are the industrial law we have to comply? What are the regulators requirement we have to comply? So they have first, what they have to do is, they have to identify those things. For example, if they wanted to open a branch, okay, let's assume they wanted to open a branch. Before for opening a branch, a bank branch, they have to get the permission from the regulator. So in areas or they have to send all the information to the regulator, and regulator will process it, and based on that process, they will provide the approval to grant they will grant the approval to open a branch. So in that case, they identify, okay, they have to get the approval from the regulator. That is first one. And if they wanted to set up the branch, there may be some environmental requirement, maybe these local authorities requirement, there may be customer care requirements. Likewise, there may be several legal and regulatory requirements. So first they have to identify what are the requirements they have to comply. What are the legal requirements and the things they have to comply first. And then they will assess, okay, if they not comply with these things, what are the repercussions will happen. So then not only branch opening, you can you may say that launching a new product, as we discussed earlier, if they wanted to launch a new product, they may think that, okay, what are the regulatory requirements they have to comply, and if they don't comply with those things, what would be the impact? And if they comply, what would be the impact? So they have to assess the compliance risk, and then they have to monitor it, continuously monitor it, whether there is any requirement changes. For example, if it is a Basel requirement, capital adequacy requirement, time to time, regulator may change the requirement. Initially, they have introduced Basel 1, then they have introduced, subsequently, they have introduced Basel 2 requirement, and now they are implementing Basel 3 for the capital requirement. So, time to time, there may be regulatory changes and requirement changes and new circulars. For those purpose, the compliance function has to continuously monitor what are the changes happening in the regulatory environment, legal environment, and all the other things. So they have to monitor, and based on that, they have to give the advice to the top management or senior management. Okay, these are the requirements are getting changes. You have to adapt on it. For example, IFRS 9. Sometimes before there's accounting body, Sri Lanka accounting body, as well as chartered accountants, chartered accountancy body, as well as central bank introduced IFRS 9 requirement to the banks. So in that case, the regulator has to, the compliance function has to identify, okay, what are the requirement changes and what they have to do with that to comply with those requirements. So they based on that, they will advise to the top management. And again, finally, time to time, we have to submit a reporting to the top management about the compliance function. So by compiling these things, we can say there are 5 steps or 5 processes get involved in a compliance function. First one is identifying the compliance risk. Second one is assessing the compliance risk. Third one is monitoring the compliances continuously and advising about the compliances and regulatory requirement. And finally, the time-to-time reporting about the compliance function to the top. So these 5 steps, including the compliance function of a bank and finance institutions. Any questions before moving to that? Do you want to ask anything from me? I think I know that you may be tired after the work, heavy work maybe. Anyhow. So here, what is the purpose of compliance function? The purpose of the compliance function is to assist the banks and finance institution in managing its compliance risk. This is the thing I am always reiterating from the beginning of the class is the compliance risk is connected to the, compliance function is connected to the compliance risk. So the purpose of the compliance function is to assist the banks and financial institution in managing its compliance risk. So the compliance risk is much important part of the banks and finance institution. I don't know, I have mentioned to you all already. Compared to other institutions, it may be production institution or retail businesses or some other institution, the banks and finance institution having more compliance or supervisory requirement, more regulatory requirements. So they have to comply with, it is important to them to manage the compliance risk. That's why in the central bank also, the bank supervision department required a separate compliance function by each and every bank. The compliance is also referred to as integrity risk because the bank reputation is closely connected with its adherence to principle of integrity and fair dealing. Actually, the compliance risk has to be referred as an integrity risk because, as I mentioned already, the complaints, non-compliance will affect non-compliance of any legal requirement or regulatory requirement will affect the banks and finance institutions' reputation, because the bank's reputation will go or severely affected by if they are not comply with their regulatory requirement. So that's why it's called as a integrity risk. And again, the compliance function can be divided into two sections. The first one is centralized compliance function, and second one is decentralized compliance function. Even in the risk management sections, we have seen that the risk management department the risk management functions of framework has been divided into two. There are silo-based risk management framework. Other one is the integrated risk management framework. Likewise, in the compliance function also, there are two type of compliance functions are followed by the different institution, bank and finance institution. One is centralized compliance function. Other one is decentralized compliance function. The centralized compliance function is typically there may be a centralized department for a compliance function, and there will be a chief compliance officer, like chief risk officer. There will be a chief compliance officer. The chief compliance officer will be in charge to the compliance function, and all the reporting, this regulatory reporting and everything will be routed through that particular centralized compliance function as compliance department. So in that case, what will happen is generally, for example, time to time the banks and finance companies has to have several reporting, even monthly, weekly, as well as quarterly. They have to send several the reporting to the central bank regulators. Not only regulators, even the tax, Inland Revenue Department, maybe every quarter they have to report they have to report their tax related matters to the Inland Revenue Department. And if it is a listed banks, time to time they have to inform to the SEC or Columbus Stock Exchange about the any changes or relevant to their requirements. So likewise, there may be several regulatory and legal requirements which a bank or finance company has to comply. So what will happen is the centralized compliance function, the centralized department, they will check about it. Okay, they may have some checklists. Okay, whether they are these relevant department, they will check. Okay, finance department has to send their this is reports in this frequent. Okay, then they will make sure whether those reports has been passed to the regulators, and whether there may be any new regulatory reports has to be submitted. So they will submit the they will inform about the new reporting requirement. Likewise, the centralized department of the bank and finance institution will be in charge for this compliance function. On opposite or flip side of this, there may be decentralized compliance function also in the bank. If it is a small bank, they may have the decentralized compliance function. So under the decentralized compliance function, there may not be a centralized compliance department. So what we'll do is, okay, the senior management, they will allocate some regulatory requirement to certain department. For example, if it is the SLR, statutory liquid asset ratio, the treasury department of the particular bank has to report. If it is the monthly P&L and balance sheet, then accounts division has to submit that report. And if it is a sector-wise credit exposure, the credit department, credit monitoring department has to. Likewise, the decentralized compliance function, under the decentralized compliance function, different department may be in charge for the particular compliance function. So here there will not be any centralized. here decentralized. Everything has been decentralized, and those departments are responsible for the particular decentralized compliance function. So that is about the decentralized compliance function. Students, are you okay with your? Do you wanted to ask any question? You can ask. Yeah. Any questions so far?
No, sir, all good.
Okay. Then we will just move into the formal status of compliance functions. The compliance function should have the formal status within the bank. What is it? It means if it is a bank, if there is any compliance function, there should be a formal status. Formal status in the sense the board of directors should recognize that, okay, there's a compliance function. And there should be a compliance policy, approved compliance policy. And under the approved compliance policies, the time to time, the top management has to review whether the compliance functions are properly happened. Another thing is, on top of that, in some banks and finance institutions, they may appoint chief compliance officer to carry out this compliance. So, like that way, there should be a formal status within the bank about the compliance functions. Okay, the formal status of compliance function should be established through a compliance policy approved by the board of directors. That's what I have mentioned already. Because the formal status, I think there may be questions. There were some questions in the past papers also. The formal status, the compliance functions should be coming through the tone of the top, is in the from the top management level. So, and the top management level, they have to recognize that this is the compliance function, and this is the chief or risk officer, and they have to encourage all the staff to comply with the requirements. Okay, that is the important thing, so that we will discuss in the compliance culture. Under the compliance culture, so the formal status of the compliance function should be established through the compliance policy, because even any banks, any finance institution, okay, time to time persons may get changed, but there should be some written policies, which written policies will provide, and that will help to continue that functions. That is first thing. So the compliance function, the board of directors has to the board of directors has to appoint or approve a compliance policy for the bank, and they have to time review that policy. That is important, because the most of the institution, when we are going for a supervision, we observe that once they approve formulate the policy and approve, and for a long time there won't be any changes, and that particular policy will continue. But the business environment may get changed, or business model of the bank may get changed. When the business model of the bank get changed, the compliance policies and procedures has to be changed in according to that. So that's why time to time the top management, it's a responsibility of the top management to review the compliance policy, and they revise. They have to revise the compliance policy and make it an appropriate to that environment. So the first one is the formal status will be created through the approved policy. Then second one is there should be a compliance officer with overall responsibility for coordinating the bank's management with regard to compliance risk management. That is the second one. The first one is approving the policy. Second one is the compliance officer should be appointed. Normally is called as a chief compliance officer. So the compliance officer, all the responsibilities has to be given to that particular compliance officer by the top management to coordinate the management to the bottom level as well as top management with regard to the compliance risk management of the banks and finance institutions. That is the second thing with related to the compliance of the formal status of compliance function. And third one is compliance function staff and head of compliance should not be placed in the position where conflict of interest between their compliance responsibilities, any other responsibilities. This is we have seen even in the risk management as well. When they are appointing a risk officer, chief risk officer or risk management officer, they have to there should not be any conflict of interest. Likewise, here for a compliance officer also, there should not be any conflict of interest. For example, an officer, he is the person in charge to calculate the SLAR, statutory liquid asset ratio, return to be sent to the central bank. Okay, here one officer is responsible. Similarly, that same person is a compliance officer also, and he is looking to the in charge to check that whether that compliance function in the statutory liquid asset ratio is properly calculated and sent it to the central bank. There is a conflict of interest. If something happened, lapses happen in the sending of this SLAR return, he may have the hesitation to escalate that to the top management. So when the bank management appoint the staff, compliance staff and chief compliance officer, there should not be any conflict of interest. So if there is any questions, I think there were some questions in the past paper, the formal status of compliance functions. So you have to mention 3 points for that. The first one is the formal status should be ensured through the approved compliance policy. And second one is there should be a compliance officer should be appointed and has to be given the full responsibility to coordinate the compliance risk management function with the top management. And then third one is the compliance function of the staff and head of compliance should not be placed where there may be conflict of interest. So these three things has to be followed to run a formal status of compliance functions. That is about the compliance function, formal status. And this is again another important thing, the compliance culture. The compliance culture is it's a work culture of the finance institution is naturally compliant in each and every operations. For example, what the concept is here, the compliance function has to be created as a culture. Even it's a top management, or even if they lose money, a sizable amount of money, they have to comply with all the requirements, and even in the top management level or bottom level, they have to give the prominent, or they have to create a culture that the bank or finance institution will comply 100% comply with all the legal and regulatory requirement in their day-to-day business. It has to be created as a culture. Because why the culture is important is the compliance governs the way the banks and finance institution operate. Since compliance function is a continuous activity, each and every officer need to be conscious about compliance function. That is most important. And they are saying that, for example, in some literature they have mentioned that even at the top level, sometimes if the bank make huge losses or bank will have a good profit, sometimes they may adjust their the requirement, legal requirement or regulatory requirement. They just try to bend it. Actually, they say that it should not happen. It has to be like a culture. Even though they are losing the money, even though they are gaining a much, what they have to do is, and each and every point, they have to follow the complaints or the regulatory requirement and legal complaint in their day-to-day operation. Another thing is it has to come as a tone at the top. So in the improvement of the compliance culture maybe start at the top management level. So in the board of directors level, but what they have to do is they have to start the compliance as a culture and align the compliance with the risk management department, because it is also concept, it's also one of the risks, the compliance risk, but the align with the risk management department and incentivize ethical behavior. For example, if an officer comply with the rules and regulation, but with that function, sometimes bank may have disadvantages, but we should not punish that employee, that incentivize the ethical behavior and don't ignore the compliance mistakes and use the right technology. By doing this, they can, a bank or finance institution can improve the compliance culture. So that is about the compliance culture, and this is one of the area there are questions repeatedly. And this is about the governance, risk and compliance. Actually, the corporate governance, compliance, and risk management, these three concepts are the sort of interrelated. They are having very much related, and to the success of one concept, other two components has to be worked in a coordinated manner and in a successful manner. For example, if there should be a successful risk management function, there should be a successful compliance function as well as governance. So if there should be a good successful compliance function in a bank or finance institution, there should be a good risk management function as well as governance function. That's what it says, that the compliance, risk and governance are interrelated things. So governance includes the corporate management, strategic formulation, and policy management. For example, if there should be a good compliance function, then there should be a good policy management related to the compliance function. So to the policy management or strategic formulation, there should be a good corporate governance. And other way around, the compliance is the measures to comply with the laws, regulations, and policies. If they comply with that, that may encourage the governance. And the risk management, of course, I think I need not too much emphasize to you all that is identifying, assessing, managing, and monitoring. This by doing this, this will value added to the governance as well as compliance. So in case of these three concepts, which are interrelated and important. So before going to the responsibilities of the board of directors for the compliance functions, if you have any question, you can ask. Okay. The responsibilities of the board of directors for compliance function. Yeah. Any questions you all wanted? Okay. The responsibility of the board of directors for compliance functions, like risk management functions, the compliance function also we have already discussed. It has to be start from the top management level. So the board of directors must have some responsibilities. And that's why we are discussing about here the responsibility of the board of directors for the compliance function. As like risk management function, even here also the board of directors having the ultimate responsibility of compliance functions. That is, you have to keep in mind, even in the risk management functions or compliance functions or any functions, generally if it is the company, the board of directors are having the ultimate responsibilities. They may share their responsibilities, not responsibilities, their duties and powers to others, but ultimate responsibilities with the board of directors. So likewise, the compliance functions also ultimate responsibilities are with the board of directors. And the board of directors has a responsibility of overseeing the management of bank's compliance risk. That is important. So there may be different centralized compliance department, there may be chief compliance officer and all, but the board of directors has the responsibility of overseeing the management. How can they oversee? Generally, what they can do is they can formulate the policies and time to time review the policies, and time to time what they can do is they can get some reports from the compliance department or senior management, and they can discuss about, review it. Like risk management department, so risk management, here also sometimes some banks are having separate committee for a compliance committee and risk and compliance committee, audit and compliance committee likewise. So where there may be one director, it's a board subcommittee, one director may be the chairman of the committee, and some senior management, chief compliance officer, and some senior management will be in the that committee. So what they have to do is they have to time get their reports from that compliance committee, and they can discuss and review it. Likewise, they can oversee the management of the compliance risk of the banks and finance institution. That is the first one. The second one is the board should approve the bank's compliance policy, including a chart or other formal document establishing a permanent compliance functions. Because that is coming under the permanent compliance function, in the sense it's emphasizing that there should be a separate compliance function and centralized department. The permanent compliance function should be there, and there should be a formal document to establish it. And at least once a year, the board or committee of the board should review the bank compliance policy and its ongoing implementation to assess the extent to which the bank is managing its compliance risk effectively. That's what I have mentioned to you all, that any bank or finance institution can formulate the policies, but if they not review that policies time to time, then there is no point of keeping that policy, because the business environment may get changed rapidly generally. So to comply with that rapid change, or in order to parallelly traveling through that rapid change, these compliance policies also should be changed. So that's what it says, that at least once a year, the board should review the bank's compliance policy and its ongoing implementation to assess the extent to which the bank is managing the compliances effectively. So these are the, I think these are the main responsibilities of the board of directors for compliance functions. Okay, then there are some responsibilities for a senior management with related to the compliance functions. The first one is senior management of the bank or finance institution is responsible for establishing a compliance policy. Okay, even though compliance policy is managed by the board of directors, the senior management of the bank, or it may be the compliance department, our finance institution, is responsible for establish the compliance policy. Okay, and then normally what will happen in the bank is the chief compliance department, they will formulate the policy. Okay, so once they formulate the policies and will get all formulated, and then they will submit it to the board of directors for their approval. So board of directors, then basically they will approve the policy, but the formulation will happen by the senior management or centralized compliance department. So that is one of the responsibilities of the senior management. The second one is senior management is responsible for ensuring the implementation of compliance function within a bank and finance institution. That is the second one. Is because any even though the board of directors is ultimate responsibilities, they can't directly implement this. The implementation part will be the senior management. It may be centralized compliance department, but the senior management is responsible, and they have to ensure that okay, all the compliance requirements are compliance risk are managed in a proper way, and compliance function is properly implemented in a bank and finance institution. At least 1 year, review the compliance policy and its going implementation to ensure the policy is still appropriate. So again, it's where before likewise in the board of directors, here also they have to review the compliance policy, and if there is any appropriate changes, they have to make changes and has to approve, has to submit it to the board of directors for their review and approval. So that is the responsibility of the senior management. And report to the board of directors or committee of the board on matters relevant to compliance policy and its implementation, which is most important function by the senior management. What they have to do is they have to report to the board of directors or committee of the, I have mentioned you all this, there may be subcommittee. So that subcommittee on the matters relevant to the compliance policy and in the implementation. There may be issues. So time to time, they have to report to the top management. Top management is the board of directors or the subcommittee. So these are the responsibilities. In the exam, there may be some questions. So if there are questions and response with the senior management with regard to the compliance function, then if you have mentioned these 4 functions, that would be enough actually. So these are the things you have to mention. And then again, the compliance officer. The compliance officer or chief compliance officer is responsible for day-to-day management of the compliance functions. Or he may be the officer responsible to coordinate the matters related to the compliance function of the bank and finance institution. Who is the compliance officer? The officer who is responsible for day-to-day operation or management of the compliance function, or the officer who is responsible, who is coordinating the compliance function of the matters related to the compliance function of the bank and finance institution. Compliance officer is an individual who ensures that company compliance with its outside regulatory requirement and internal policies. Here again, reiterate that the compliance function is not only for outside regulatory requirement, even comply with the internal policies also coming under the purview of compliance function, and the compliance officer is responsible for coordinating. Duties of the compliance officer may include reviewing and setting the standard for outside communication. Compliance officer may also design or update internal policies to mitigate the risk of the company. So the compliance officer, his duty is reviewing and setting the standard of outside communication and comment. Actually, the compliance officer may play the role as a communicating, how to communicate with the communicating with the outside part. These are some of the responsibilities of the compliance officer, role and responsibilities of the compliance officer. I just give it to you all just to nothing to explain much here. So you all just read it, you can get the idea. So the first responsibility or role and responsibility of the compliance officer: identify, document and assess the compliance risk associated with business activities of the finance institution. So in a finance institution, in a bank and finance institution, there may be several business activities. It may be branch operation, it may be treasury operation, it may be related to a new product. Likewise, there may be credit operations, and there may be several business activities. So what the compliance officer has to do is, first compliance officer to identify and document, assess and document the compliance risk related to each and every activities of the finance institution, business activities of the finance institution. First thing they have to do is identify and assess. Okay, so in a bank and finance institution, it is the duty of the compliance officer to identify and assess and document the compliance risk associated with its business activity. First one. The second one is promote the ethical conduct and compliance with the rules, regulations, and institution policies. Because the compliance actually, it has to be promoted. Because I have mentioned you all that it has to be created as a culture, so it has to be promoted. So it is the duty of the chief compliance officer to promote the compliance culture and promote the compliance rules and regulations, institution policy. Develop the appropriate compliance culture. That is one of the other things we have discussed about the compliance of culture. And I think it is not necessary to explain again about the compliance function, but it's a duty of the compliance officer to develop it. And identify the potential threat on the non-compliances, because this is sort of assessing. Because if they don't comply with or don't comply with the particular requirement, what would be the threat? What would be the risk or an impact? They have the compliance officer should identify and keep it. And advise the senior management on compliance laws, rules, and standard and regulatory issues. Because it is another important. The risk management, of course, this advisory part is not a separate thing. But in the risk, the compliance function, advise the senior management on the compliance laws, rules, and standard is much important. And another thing is one of the main role of the compliance officer is time to time there may be several changes in the regulatory environment. Even in the central bank, if you see that every month they are issuing every month they are issuing the directions. Either different department may issue, maybe bank supervision, IO, international operation, domestic operations, foreign exchange. Likewise, there may be several departments in the central bank. And again, SEC, there may be several directions. And again, a accounting body and tax authorities, Inland Revenue Department, environment. Likewise, there may be several regulatory requirements, then regulatory environment getting changes and regulatory requirement getting changes. So they have to, this compliance officer has to follow it up, and they have to advise the senior management on this compliance function and changing one. This advising part is important for one of the important function of the compliance officer. And compliance monitoring, of course, which is the monitoring. Why we are saying monitoring is it's a continuous process. The monitoring is a continuous process. So time to time there may be changes, so they have to continuously monitor. And handling the compliance related matter is other responsibility of the compliance officer. So before going to this core principle of compliance functions, I like to give a chance to you all. If you have any questions, you can ask. I don't know whether it is in the night 8:30 it is boring for you all. Can't help because we have to complete the syllabus somewhat quicker than the expected time. That's what we arranged this class. So that's all about. If you have any questions, you can ask. Okay. Since there is no any questions, I like to ask a question just to get a feedback whether the class is going on a effective way, or otherwise sometimes there's no point of just telling myself and just continue the class. What are the complaints function process? There are 5 processes involved with the complaints functions. What are those processes? I'm asking the questions again. There are 5 processes which involve with the complaints functions. What are those 5 processes?
Identifying, assessing, monitoring, advising, reporting.
Exactly. Very good. Very good. Actually, thank you for the answer. That is those 5. Those identifying, assessing, monitoring, advising, and those are the 5 process we have discussed about the complaints function. 5 process about the complaints functions. So then I'm having that answer. I'm moving to the next one, the core principles of compliance function. Because in the Basel committee, they have issued certain principles for compliance function. They are for a Basel, not Basel committee, the BIS, Bank for International Settlement. Like the central bank, they are the sort of central bank for all the central banks, or the committee which is sort of very highly recognized committee for this supervision and all. So they issued some core principles, even core principle for bank supervision they have issued, and this is they have issued some core principles for compliance functions. So these are some 2 important core principles which I like to highlight it, or I like to highlight it to you all. These 2 functions. The first one is compliance function should be formal document approved by the board of directors. They say that if it is the compliance function, it should be formally documented and approved by the board of directors. That sets out the function standing, authority and independence. That is the role and responsibility of the compliance function should be clearly defined. Actually, based on this the core principle only, we have developed other concept actually. So they say that if it is the compliance function, it should be the top management has to be approved, and there should be a formal document, and the formal authority has to be given. Normally, the compliance officer, a senior officer will be appointed to the compliance functions, because if it is a senior officer only, he can just ask the ask with the or check with the other people about this compliance function also. So proper authorities has to be given, and it should be independent function. Comparably, not 100%, but comparably independent, and the role and responsibility of the compliance function should be clearly articulated or clearly defined. That is the first core principle. And second one is compliance function should be independent from the business activities of the banks and finance institutions. This is, I think, we have discussed a lot of things about in the risk management. And in the risk management also, we have always mentioning that the risk management function should be an independent function. There should be a conflict of interest between the risk management functions and sort of officer, the risk management officer, and he should not get involved with the other activities of the banks. So likewise, the compliance function also, there should be an independency in that. So the compliance function should be independent from the other business activities. For example, if I say an example that credit agent, he's a chief accountant. Okay, he's a chief accountant as well as compliance officer, chief compliance officer. Let's assume. Okay, and from the accounting department, accounts department, or finance department, there may be several return has to be go to the central bank, or return means reports time to time, weekly, monthly, quarterly, biannually, annually. Okay. If a chief accountant or chief financial officer is the complaints or chief complaints officer, then what will happen is if something, if some reports are going on regular basis from the finance department, he may not escalate that risk to the top management. Then that will affect the complaints function of the particular bank and finance institution. That's why I say that complaints function should be independent from other business activities. So these are the two core principles of the complaints function. And then there's other thing is the complaints testing. I think in the exam for short notes, there were some questions about the complaints testing. The complaints testing is a technique that is used to validate whether the system and control of an organization meet the externally and internally prescribed standards. That is called complaints testing. So it is sort of a technique that is to test whether the complaints, whether the system and control of the organization meet the externally, internally prescribed standard. And complaints test provides the finance institution with the information necessary to monitor its complaints risk exposure and self-correct as necessary. And it also helps regulators to assess the level of complaints by the regulatory entity in order to determine the level of regulatory interferences if needed. So this is sort of a independent test. The compliance test is a sort of independent test which generally check whether the bank and finance institutions, banks and finance institutions system and control meet the standard, the externally and internally standard, whether they are meeting, and then they are just testing and reporting it to the level. So that is about the complaints testing. And the other one is complaint function versus internal audit. I think internal audit we have not discussed yet, but under the risk management we have seen something to some extent. We have discussed about the internal audit, and internal audit is considered as a third line of defense in the risk management department. So here they have mentioned about that complaints function reasonably ensure that there's a comparison. Because why I just included this slide is there may be some short notes in the exams, so you may answer this. It will help you to answer the those short notes. That's why I have included these slides. The complaints function versus internal audit function. Complaint function reasonably ensures that all the rules and regulations are followed in day-to-day operations, but internal audit give assurance on system and procedures. What does it mean? Generally, the complaints function, what they are doing is, okay, they are just ensuring that, okay, these all the department, all the relevant divisions are comply with the rules and regulations, and there is no there is no complaints risk from this operation, day-to-day operations. So they will just ensure that they will not give an assurance, but the internal audit will have given assurance through the system and procedures about that procedure. For example, if we see that the complaints department will ensure that, or sort of ensure that all the returns are going from that particular division. For example, if it is a finance division, all the returns are timely going to the regulator. They will ensure that. But internal audit, what they will do is they will make sure, or they will give an assurance that, okay, prevailing system and procedure of the finance department will make sure that all the returns will go on time to time basis. So they are giving sort of assurance. That's what even in the internal the risk management, we had discussed about that internal audits giving sort of assurance to the top management. Okay, system and procedures are make sure is adequate enough to make that function. So that is the main difference between the compliance function and internal audit function. And other one is, of course, everybody knows that these compliance functions coming under the second line of defense, but internal audit function coming under the third line of defense. And compliance function involved with the present and future. Okay, this is one of the other important thing you have to keep in mind. The compliance function involved with the present and future, but internal audit function involved with the past and present. They will just they will check the past. For example, if they check the accounts or anything, it is related to the past. And for example, vouching or any payments or anything, the past and present. The presently with the system and controls are okay, and past transactions. But the compliance function is generally with the present and future. And internal audit function is more independent than the compliance functions. So this is a because actually when I am preparing the slides, I just go through all the past paper questions and preparing, because okay, you have to get the knowledge about the internal compliance function and internal audit and everything. On top of the knowledge, you have to able to give the answer. So that's why this is, I just observed that there were some questions about the comparison between compliance function and internal audit. So that's what I just give it that. Another thing is one more thing I can just mention to you all. Whenever actually I'm getting involved, even some paper corrections also, not this subject, some other subjects. It is an easy way to earn the marks through sword notes. If there are questions with the sword notes, and if you know the answer for those sword notes, better to choose that questions, because you can easily earn the marks through the sword notes. Because sword notes very straightforward answers. If there is any concept is okay, then you can get the more or less full answer, full marks. So in the exam point of view, it is better to if you know the answer. If you don't know the answer, of course you have to select some other things. There is no option. But if you know the answer, better to it is always better selecting the sword notes questions. Then you can earn the answer. This is one of the tips I can give to you that will help you for the exam. Okay. Then okay, now we have, I think we have discussed about these compliance functions and it is basic concept and all. Now we are going to discuss about the central bank requirement on the compliance function. Central bank issued a circular, I think in 1998. And they have make some requirement that the bank should have some minimum requirement on the compliance functions. The first thing is they say that there should be a compliance officer in each and every bank. Okay, so if it is a bank, licensed bank, they should appoint a compliance officer. And then they say that banks should establish an independent compliance function to ensure compliance in respect of banking and other statutory requirements. Okay, and banks should have adequate policies and procedures to ensure compliance with the laws and regulations. Banks should appoint a compliance officer. Okay. Through that direction, 1998. Okay, do you all know that since you are students, I just wanted to mention that if you all wanted to get to know any direction of the central bank, you can go to the central bank website. There may be so many drop-down menus, so many in the sense 5 or 6 drop-down menus on the home page, and one of the drop-down menu is low. If you just go to the low, then there is a the list called the banks, non-bank, licensed finance companies, likewise. So if you select the bank, then you will get all the directions issued by the central bank with related to the by the bank supervision department of the central bank. Okay, so where you can get this is why I'm saying this is to get some additional knowledge about your subject matters. So this direction also available in that the bank supervision department directions. So based on these 1998 directions, it says that or the central bank or the bank supervision department of the central bank required that every bank should establish an independent compliance functions. First thing. And the bank should have the policies and procedures to ensure the compliance with the laws and regulations. Second thing. Third one is the bank should appoint a compliance officer. So these three things are mentioned in that circular. And the terms of reference of the compliance officer also mentioned in that circular. The first one is what are the TOR of the compliance officer? First one is develop policies and procedures designed to eliminate or minimize the risk of regulatory requirement. They have to try to eliminate the risk, but sometimes if it is not possible, they have to minimize the risk of breaching the regulatory requirement. That is the first TOR of the compliance officer. The second one is promote throughout the business the belief that compliance is not a negative process, but positive contribution to the success of the bank. The compliance officer function. Actually, we have a conventional mindset. Some conventional mindset is, okay, compliance functions and risk management functions, these regulatory requirements are additional burden to the banks. That is our sort of mindset, general mindset. But actually it is not. The proper risk management function will add the value to the banking business. Likewise, the proper compliance function will add the value to the banking business. Okay, so promote throughout the business the belief that compliance is not a negative process, but a positive contribution to the success of the bank. That compliance officer, one of the TOR, he has to promote it. And when introduce the new business finance instrument of conform to regulatory requirement and internal compliance and ethical standards. This is in the first example I say that when they have introducing new product or try to launch a new product or they are into the new business of finance instrument, what they have to do is they have to check first they have to identify what are the regulatory risks involved with this or compliance risk involved with this, and then whether all these new product and new businesses are comply with not only external requirement, internal compliance and ethical standard also play. Because some business activities, okay, it's not illegal, but it may be unethical. Actually, in our country, okay, we should not play an unethical game also. Okay, so they have to check whether compliance officer must check whether it's an ethical standard, it's comply with the ethical standard. Okay, so this is about the okay, there are more terms of references. Other one is maintain a regular contact and good working relationship with the regulators, of course. Actually, in the banks, some banks are having very good relationship with the regulators and they are just getting benefited. So the maintaining good relationship with the regulator is one of the requirement of the compliance or terms of reference of the compliance officer. Promote across the compliance network best practices developed in the area of compliance. Understand and apply all new legal and regulatory development relevant to the business of bank. ensure that compliance policies and procedures are clearly communicated to management and members of bank. And I think it's I just read it out because there is no much to explain here. Then provide timely report to management by highlighting regulatory developments in charge in the laws and other developments, and highlight senior and persistent complaints, serious and persistent complaints problem where appropriate, work with management to ensure that they are rectified with an acceptable time, and represent the compliance functions on relevant internal and external committees. These are some of the TOR of the compliance officer set out by the central bank. Okay, then we are moving to the other sections, which is related to the anti-money laundering and combating financing of terrorism, AML and CFT, which is most important these days. We are having standards. I think in the internationally we have to comply with these requirements, and there may be several requirements related to this anti-money laundering and combating financing of terrorism. I think you all may heard about this if you all work in the bank and finance companies and other finance institutions. Even nowadays, it's applicable to even the non-finance businesses, even the jewelry shops and all. These things I can easily, simply, I can introduce that under this requirement only. These KYC policies are triggered. There are three concepts under this: KYC, anti-money laundering, AML, and CFT. They know your customer, enable the bank to know or under. Okay, before going to that, if you all have any questions first, because better to give a chance. If you all have any questions, you can ask. There's a questions here, central sir, who conduct the complaints test by the bank or central bank. Actually, it is not the bank, it is not the central bank. It is an independently. The banks request some independent body to conduct the complaints test and give the report about it. So generally, it will be triggered by the banking side, and it will happen as sort of independent test. So they will independently test and check whether the system and procedures are adequate enough. And central bank, normally what central bank is doing is time to time they are doing some examination, on-site examinations. On-site examination means they just go to the bank and they check their books and records and all, and some special functions, particularly IT functions and all. At that time, they may check this. They may check about these complaints functions, how this complaints function is functioning, operating, and whether it is adequate enough, and whether these complaints officers are given adequate powers to carry out their complaints function, whether they are independently functioning, and all sort of things will be checked as a part of the on-site examination. But generally, this complaints test will normally the banks, central bank doesn't carry out, but it's an independent but triggered by the bank side. Triggered by the bank side. Any other questions? Okay, then I will just actually now we have discuss about the basic concept of the basic concept of the compliance functions, and then we have discussed about the central bank direction on the compliance function and compliance of the TOR. Now I am moving to the new area called this anti-money laundering and combating terrorist financing, financing of terrorism. So where three concepts are most important. Before going to the detailed studies, three concepts are important here. The first one is know your customer. This is KYC. Everybody may know about it. Even if you are not working in the bank or finance institution, you may came across this know your customer policy screening. If you wanted to open a bank, any accounts, open a bank account or saving account or any account. So at that time they may give some sort of forms to get you some idea about the customer. So the KYC enable the bank to know or understand their customers and their financial dealing to be able to save them better and prudently manage the risk of money laundering and financing of terrorism. They may ask the questions like, for example, they may ask the question that, okay, what is your monthly income? If we may think that, okay, 50,000 or 100,000 or 200,000, we may think one amount. And likewise, they may ask some questions about job and all, and then they will just that will give some idea about our customer group where we live and all sort of thing. That will give some idea about the particular customer. That is called the KYC. Okay, that will give a better prudently manage. That will facilitate to prudently manage the risk of money laundering and terrorism. For example, I can just give an example. Okay, I'm a teacher. Then my salary is 50,000. So let's say. Then I'm always depositing 50,000. But suddenly, if I deposit some 5 million or 10 million in continuously in 3-4 months, then the bank will get alert. Okay, the KYC, he has mentioned the 50,000, and he's always in the particular bank account always 50,000 is depositing, but suddenly the 5 millions are getting deposited every month for 5 months, 6 months, last 6 months. Then they may ask that they are okay, they will get alarm. So how they will get alarm? Because they know about the particular customer and his behavioral pattern. Okay, his earnings and all. So that will give a more understanding about the customer, and it will facilitate to manage the risk arise emanating from the money laundering and terrorism financing. Even I think very recently there was a news item that I think in the Colombo area there was a person a lady arrested because some large amount of money deposited to the particular customer's account. Okay, the depositing large amount is not an issue, but if it is always depositing, that's not an issue. But suddenly deposited to a large accounts, that will get. So KYC information will give a best understanding about the customer and his behavior. That will facilitate to manage the money laundering and finance. That is the first thing. Actually, these days, everybody knows about the KYC. KYT, these days, there's a concept called KYT is getting more prominent. You may get, just note it out better. KYT. What is the meaning of KYT? Know your transactions. It's a concept called not only the customer, the bank must have the knowledge about each and every transaction of the customer. Know your transaction, KYT. Because they say that to prevent the money laundering and financing of terrorism, the bank should be the vigilant at a level, at an extent to KYT. Know your transactions. Okay, so know your customer is, of course, that is familiar. And anti-money laundering is a sort of a set of laws and regulations and procedures intended to prevent criminal from illegal discussing the illegal obtained fund as legitimate income. That means to convert the illegal fund into the legitimate fund. So it's sort of money laundering, the dirty money laundered into the good money. So though anti-money laundering laws covers the relatively limited range of transaction and criminal behavior, their implications are far-reaching. So this is about the laws and regulations related to or that prevent the criminals from converting their illegal money into the legitimate money. We will discuss a bit about how this money laundering is working in the next slide. Just keep it that's a concept level. And combating the financing of terrorism involve investigating, analyzing, deterring the preventing sources of funding for activities intended to achieve political, religious, or ideological goals through violence and threat of violence against civilians. So, this is related to the combating of financing of terrorism. So these three concepts are sort of important things or sort of important concept to study this anti-money laundering and combating financing terrorism. And of course, the KYC we have discussed already. KYC is the customer due diligence, is an ongoing process of prudent banking practices. Therefore, banks are encouraged to do the following: put in place a system to monitor account and transaction on regular basis. So what they have to do is, okay, that's what I say, that they have to monitor the accounts, and there should be it's not possible in manual, but there should be a system to monitor the transaction. Update the customer information at a reasonable intervals. That is the important thing the banks and finance institution has to do. Normally what happens is, okay, if it's 10 years before, when we are going to open a bank saving account, that time they may get the KYC. After that, it may not get updated. So in that case, it's risky. So they have to update in a reasonable intervals and maintain proper records of customer identifications, billing proof and all, and even some to extend the photos of the customers. Monitor and check the unusual large transactions. That's what I have already mentioned. If a person always depositing 50,000 and suddenly started to deposit 5 million, then it has to be check and monitor. And providing transaction to providing training to staff on KYC. It's also important with related to the KYC. They have to the staff should be given a proper training on the KYC, and that is important in the KYC. The objective of KYC is to prevent the terrorist financing, money laundering, and financial fraud. KYC allowed to understand the customer better and manage the risk prudently. Okay, this is about the money laundering. This money laundering is a process of making. Money laundering is a process of making large amount of money generated by criminal activity, such as drug trafficking or terrorist funding, and appears to have come from the legitimate source. It means, and the money from the criminal activity is considered dirty, and in the process of launders, it make it good, clean money, and money launders itself a crime. What does it mean? It means in the world, there may be several illegal activities or criminal activities. It may be truck trafficking, or these trucks will be smuggled from one place to other place, and that sort of activities, or terrorism activities, or some other criminal activities. The people may get, some group of people may get money, dirty money or illegal money. And they can't directly take that illegal money into the system because there is no source. So what they will do is they will do sort of technique or strategies to make this dirty money into clean money. It's a simple money laundering. It's a make it the dirty money into the clean money. So the launderers will make it the dirty into clean. If you see this graph, the diagram, you can see that they're collecting the dirty money. They are just first they collect the dirty money. What they will do is they will place in the bank. So they place in the bank. I said that there are processes in the bank. There may be, for example, if one person is depositing the money, and suddenly they deposit a high amount of money, then there may be an issue. Because bank will alert and bank will get reported. So what they will do is they will use several strategies, different strategies to deposit this type of money. For example, they may have different accounts, so many accounts. So they will deposit small amounts to the particular so many accounts. Okay, and then slowly what they will do is they will transfer through the online transfer and all. They will transfer that money into the particular account. They will transfer to the other countries, other territory. They will transfer to the particular account. Or within a country, even they will transfer to the particular account. Now it comes to the halfly clean money. Even after that, what they will do is they will make it to buy a real estate or precious metals, even gems, even gold or vehicle and all. They will use this money to buy it. Then once they bought it, then it make it as a clean money. So when they sell it, they may just say to the bank or finance institution, the money there's a source to the money. I sold the property, that is this money, and make it as a legal money. So this is the one of the typical model these money launderers are using. So first they will just do the transfer money in a small amount or some other way. They just park it to the bank and then transfer it and they just make it as a one bundle, and then they buy it as some precious metal and vehicle or anything or real estate, and then they will make it as a clean money. So this is the way they are doing the money laundering in Sri Lanka. Okay. Any questions you wanted to ask? This is one of the important, sort of very interesting topic, I think, money laundering. If you have any questions, I'm ready to answer. I think even in the banks and if you are working in the banks and finance institution, you may came across very interesting stories about this money laundering. And there are some other requirements. FIU in Sri Lanka and FIU, they are time to time, they are getting several reports about this money laundering and they are continuously working on it. We will discuss on later on. Okay. Okay. Then actually, the other one is about the FIU Sri Lanka, the Financial Intelligence Unit, which we actually I'm planning to stop the class with this, and we will study this in next class. This balance part of this and some more theories in the next class. So today's class we have first studied about the what is compliance risk, and then we have discussed about the compliance function, which is the functions related to manage the compliance risk of the banks and finance institutions. And then we are just seen about the different compliance function process, 5 processes of compliance functions. and then we have discussed about the compliance culture. What is compliance culture? And then we have discussed about the different compliance functions. It means two type of compliance function: decentralized and centralized compliance functions. And then we have discussed about the different concept in the compliance. It means because we are just roles and responsibilities of top managers, bank board of directors, about the compliance functions, and then senior management roles and responsibilities, and then chief compliance officer and compliance department. And then we have discussed about the core principle of compliance, and then we have discussed about the comparison between compliance and internal audit functions and all. And then we have discussed about most important thing is the compliance test. Okay. Then we are the other sections. We entered to the other sections, the money laundering and compacting terrorist financing. We have just started about it, and we had to move to the FIU, Finance Intelligence Unit of Sri Lanka, which I'm planning to take you all through in the next class. It means Saturday class. So if you'll have any questions, I am ready to answer. Otherwise, I can just wind up the class today. If you'll have any questions. Okay, students, since you all don't have any questions, I'm trying to stop the class to, with this point. I think we can discuss the balance on in the Saturday class. And thank you for participating in the class even after the hard work or working day. Thank you. Good night.